if I get an interest-only mortgage, then I'm going to have debt for the rest of my life, and that's a huge risk. Well, in today's video, I'm going to break down how it's not quite as risky as you may think. Well, first of all, what exactly is an interest-only mortgage? Well, when you get out debt on a property, also known as a mortgage, you usually get a repayment or an interest only. I think it's pretty self-explanatory. On a repayment, you are paying a monthly payment, which mostly is covering the interest payment, but also chips away on the payment down on the property value. And over time, by the end of the mortgage, the idea is that you are debt-free. Whereas on an interest-only mortgage, let's say you've got a £200,000 loan against your property, at the end of the 25-year period, you still owe the $200,000. So you are never paying off the capital or the debt on the property. One of the big pros of an interest-only mortgage is that the monthly payments are a lot lower. So for example, if you've got a £200,000 loan and you're paying 3%, then that's only going to be £6,000 a year or £500 a month. Whereas on a repayment mortgage, it's probably going to be about £800 to £900 a month. So if you're owning the house and living in it, it's more rare to get interest only, but you're really going to be able to manage your finances more appropriately. If it's a buy-to-let property, then you're going to make more positive cash flow each month. Of course, the downside of this, if interest rates go up over time, then all of your costs can go up dramatically. So on that same example, if you go from 3 to 6%, kind of like now interest rates are getting a bit higher, then you're doubling your outgoing. So if you're purchasing based on affordability on that £500 a month, it can very quickly become £1,000 a month. And because you're not really chipping away on that debt, then you're constantly paying on the same debt value through time, but it can go up with the interest amount. So interest payments are really important to find and make sure you're getting the best interest rate possible. The best place that I've found is on LENDLORD, which is today's video sponsor. If you're not on LENDLORD already, it's really for those people building portfolios, but it's actually one of the best places to not need to pay a broker in order to find you the best lending options out there. If you want to get access to that, by the way, it is completely free. You don't get charged anything at all unless you're utilizing their finance, and you can get access by clicking the link below. So click there, fill in your details and enjoy. There are a few things to consider with this, and the highest risk, and it's normal to think this is really high risk if you're not actually paying down the debt, but it's lower than you think unless you might need to sell the property in the first couple of years. The reason for this is, say you purchase a property with 200,000 debt, let's say it's worth, I don't know, 300,000 to make it easy, and you're going to end up selling it in the first couple of years. Well, you're likely going to lose money because when you're buying, you've got your stamp duty, etc. So I always say to people, if you are buying a property that you're not refurbishing to sell on, you want to own these properties for a minimum of 5 years, because that's going to allow enough growth to protect you. It's going to allow enough growth to protect your downside and all of your fees. But you do need to consider the increased risk. Now, a lot of people go, well, what happens at the end of an interest-only mortgage? And that's fair enough, because, surely you're going to owe all of the money. What are you going to do? Well, I have never met an investor ever that gets to an end of a mortgage term. And what I mean by that is I've never seen somebody take out a 25-year mortgage and then get to the end of 25 years before they actually do anything about it. What tends to happen is they'll refinance every 3 to 5 years. And this is where capital growth comes into play. So on average in the UK, property doubles every 10 years. And that's really important because I want money in my pocket. I'm sure you do too, right? So the thing that you don't think about is, do you pay tax on that money? No. And this is the big sort of false secret, if you like, that nobody really talks about. Yes, capital growth is fun. Yes, inflation pushes up materials, which means if you own the property, you're gonna make more money, but it's actually tax-free. And this is how the super rich make a shed ton of money with paying zero tax. And they refinance their portfolios, they refinance their assets every 5 years, gets a big chunk of money back in the bank, which you can spend, you can invest, you can do whatever you want with it. But because it's debt obligations, you don't pay any tax at all. So my big question is, how do you benefit from interest only but de-risk the same way as a capital repayment? You might not know this, but actually if you looked at a graph, so as you can see in the first few years, hardly any capital is actually getting paid off at all. So it's kind of like a bit of a scam, isn't it? You think that it would go like a horizontal, that's not horizontal, a diagonal line straight down, but it doesn't, it curves off. And what this means is, in those first few years, you're paying pretty much the exact same amount in interest as you were before, and chipping away like in the 10, 20, 30 quid, chipping down on that debt. So what does this actually mean? Well, you're not really benefiting. But what you might not know is even on an interest-only mortgage, you can pay down up to 10% a year on the capital completely penalty-free. Now, do I recommend doing this all the time? No. I would benefit from the really cheap interest rates, which we still have, by the way. And then if I knew a big hike was coming in, what I might do is use the excess profits to chip down on that capital repayment so that I've got less risk. And actually what you'll find is if you do an interest only mortgage and you choose to be in control of when you pay down the capital or pay down the debt, you are in control a lot more of your property investment. To summarize this video, I think a real key benefit that you miss is you are building a huge asset base that is going to create generational wealth, not just for yourself, your kids if you have them, your grandkids. You can protect the assets and somebody else is paying for it. Mortgage interest rates are the cheapest type of debt you can get anywhere in the world ever. So in my opinion, why would I want to pay that back? The other thing is over time, the value of that debt is decreasing dramatically because of inflation. This last year, inflation's been at 10%, which means my £200,000 loan has shrunk in value by 20 grand, but I've only been paying 5% on it. So I paid 10 grand and the value's decreased by 20. So I am effectively getting paid to have this debt. People don't think about that because it's a bit more complex, but my opinion, and not a financial advisor here, is I want to borrow as much as possible as long as the interest rate is lower than the inflation rate, then I'm effectively getting paid for the debt. But hey, that's just my opinion. Let me know what you think, interest only or capital repayment, in the comments. And remember, if you want to find the best interest rates out there, I strongly recommend using LENDLORD. I'll put a link in the description. Make sure you go on there. It's completely free. If you're new to property and you want to find out more, this is definitely the channel for you. Make sure to hit the subscribe button and the notification bell. And if you did get value, hit the like button and I'll see you in the next video.